Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association. And on behalf of the MGAA, I'd like to welcome you to our panel session briefing this afternoon. This is being hosted by AXA on how to find your niche and work with your insurer to build your scheme. I'd just like to run through a few housekeeping points. Please ensure your microphone and camera are turned off. If we run out of time, questions will be answered after the event. And this presentation is accredited for CPD hours if relevant to your ongoing professional development program. The learning objectives for today's session are outline how to create a multi-product scheme built around customers' needs, explain how to create a clear distribution strategy, describe how to work with insurers to create something unique, and describe how to scale up an existing scheme. This briefing is being recorded, and a link to the recording will be issued post-event together with our slides and feedback survey. Please take the time to complete our survey, which will take no longer than 2 minutes. This allows us to deliver the best possible future events to our membership. So let me introduce you to Joel Markham, Head of Sales and Marketing DA, AXA Schemes. Joel joined AXA in 2020 as Head of Sales and Marketing for AXA Schemes and Delegated Authority business. This involves managing AXA's operational teams, scheme relationships, and new deals implementation. Joel has over 20 years experience in the GI personal and commercial lines market and has worked at Allianz, Zurich, and Ageas. So without further ado, enjoy the briefing, everyone. And Joel, over to you.
Thank you very much, Tim, and welcome everybody to this very interesting, exciting webinar. We've got two of us from AXA and two wonderful guests joining us. So our guests are Andrew Keeling, who is Distribution Director from Calibrant Insurance. Andrew's been in the industry over 25 years, held a number of senior relationship and sales director roles, and has had roles at RSA, Halifax in general, and L&G, and has had a lot of experience in the MGA sector. And currently he works at a business called Calibrant, where Andrew is responsible for growth and distribution alongside the oversight of its MGAs and its insurers partnerships. So welcome, Andrew. Thank you for joining us. And we're joined by Zahid, who is Managing Director and founder of Custodian Insurance. Zahid is the MD, which was established in 2013. It's a specialist niche professional lines MGA. His business also offers plug-and-play scheme solutions in the professional indemnity market and to other MGAs. And prior to Custodian, Zahid spent many years managing capacity in MGAs for Hiscox, and therefore has quite a broad spectrum of experience to bring to this conversation. So Zahid, welcome and thank you for joining the MGAA and AXA. And last but not least, not just because he's my boss, but Gary Head is joining us, who is Director of Schemes and Delegated Authorities at AXA Commercial. He also runs our financial lines business. Gary joined AXA in January 2020 as well, and has responsibility for the whole of our schemes and specialty business across all product lines, and is very passionate about the schemes and MGA space. Prior to AXA, Gary's been with Hiscox for 22 years, where he was CUO in the UK and also in the US business, and also then ran their alternative distribution business. Was quite instrumental in driving regional growth and also setting up the binding authority business. So there's a lot of wealth and talent and experience on offer for today, which is extremely exciting. And AXA is very proud of our relationship with the MGAA and actually with both of our guests as well. So really glad that you can join us. As Tim said, if you've got any questions, we've left some time at the end for Q&A. Please also just drop them into the chat and we'll make sure that we get around to doing that. Right. So the purpose of today, as you've heard, is to how do you scale, how do you grow, and how do you find your niche? So Gary, just to get us going, why do people bother? Why if people are saying that, why bother with a scheme?
Good question, Joel. Afternoon, everybody. Pleasure to be able to chat through this key topic with all of you today. So thanks very much indeed for your attention. So why bother? I think for me, the biggest thing for me is longevity. So longevity and stability. We like to say at AXA, we put the customer at the heart of everything that we do, and creating a safety net, if you will, creating a support and a safety net for commercial businesses when they're out there in the world, which isn't getting any easier with the interest rates where they're going and with the challenges that businesses face nowadays. What they want is support and stability over an extended period of time. So I think if you can get a scheme created where you've got, we refer to it as special source. Sounds a bit odd, but it's that thing in the relationship, it's that thing in the product which appeals to the customers. It talks their language. It means that you understand the risks they face, you understand the business in which they operate and the market in which they operate. And it means that they really do value the product which you're bringing to the table and bringing to market. And for me, I think if you can do that, the conversation often moves away from price. I think many of us will know that you can always get a cheaper price, but in commercial insurance, is the coverage as good as the alternative price is offering? I would say often not. Often when the discussion comes into price, there's always the possibility of there being small print. There's always the possibility of coverage having been removed from that overall offering. So if you can explain to customers the value of the product which we're selling, and you can explain to them that it covers those niche exposures which the special source for the scheme cover, then I think it gives us the opportunity really to provide those products. Crucially, when you get claim situations, so we've had the storms recently, which we've been busy rebuilding businesses off the back of. When you get those claims situations, there's no mismatch in expectation from the customer and the insurer, and we can get on with the job of getting people back on their feet and getting them back in business, which at the end of the day is what we're all here to do. So yeah, I think that longevity, Joel, and identifying that special source, I would say.
It's we see it very a lot, Gary, and I think one of the things I'll just ask you to reflect on, what if you look back over the last couple of years, and maybe a minute or two on where it's going, how does the outlook look for schemes and the MGA market at the moment?
I mean, for me, I think the outlook will depend, right? So the schemes market prospers when we're able to deliver those expected customer outcomes and deliver that fantastic claims service. But, at the end of the day, also deliver a smaller, modest profit, if you will, for the MGA, for the possible wholesale broker, the retail broker, and the insurer. If we can continue to do that, then you'll continue to get capital allocated into that delegated authority space. I think we have all seen in the past situations where MGAs have, it's been a bit obvious really, right? They're just cheaper than everybody else in the market, and that can't last. It really can't. So either there's going to be a situation there where you've got insecure capital, and or a situation where the worst happens and customers perhaps don't get what they expect at claims time, and that's something we should all be trying to avoid. So I think the outlook is really positive in that you've got a number of really good MGAs who have identified that special source. They do talk the language of their customer group, and they are busy putting businesses back together when they have an unfortunate situation like a claim, whether that's third-party liability, whether it's property through weather, or indeed other niche coverages. Cyber's another fantastic example, right, where we as an industry can help customers understand those risks and help them manage those risks. But we can only do that if we're doing it in a way that's sustainably profitable for all parties. So I suppose what I would ask as a community is that we're all conscious of the fact that we shouldn't just be talking about price with customers. We shouldn't just be looking to beat the premium they're paying. We should be having a values-based conversation around coverage, around the quality of the claim service, around the longevity of the market that they're placing the business with. And I think if we do all those things, then the MGA and the DA space has a really bright future.
Great, thank you, Gary. And I think there's a lot of really good links then into us now moving from the secret sauce of the scheme or MGA, what makes you unique when you're and why bother, to actually starting to think about the customers, Zahid. And so building on Gary's secret sauce, which we should probably trademark, I think, in case it starts getting out there. But so building on that, for an MGA scheme to thrive, what would you call out as some of the key areas to focus in on then when you're kind of deciding to start targeting customer groups?
Yeah, I mean, I suppose as Gary says, it's understanding the segment that you're going to go for, and it's not just what are their buying, what do they do, what is their activity, but also kind of their buying habits of insurance. How what is it that they actually need, and how do they buy? We had an example early on, which I think is sort of being aware of putting on your scheme tinted spectacles, where everything looks bigger and brighter and and more of an opportunity than it actually is. And we felt that early on in the scheme that we were looking at. There was a scheme for disability consultants that we were looking to put together, and they had about over 700 members. That's all good. They weren't that well serviced, actually. Didn't seem to be any providers focused on that. So I sort of thought, actually, it looked enough. And then what we didn't understand at the time was that actually, about a quarter of them were volunteers. There was a bunch of them that were actually employees. And then there's quite a big bunch that actually never bought insurance and actually never would. They just didn't, they couldn't commit, so they just didn't feel it was something that they wanted to have. So what was left was quite a small bunch with really low premiums, which kind of wasn't really particularly viable. So it's just really being rigorous and looking at the scheme without your scheme tinted spectacles on, and thinking, right, is this an opportunity? Do they need something? Is there a gap here that needs to be filled? I think the other side of that, actually, which perhaps we don't sort of think about so much, is kind of looking at our own capabilities, our own business. What is it that we're good at? What skills do we have? What can we deliver, and where is our right to win? So I mean, another example of that is, one of our niche customer areas is PI for MGAs. We specialize in PI. We are an MGA. We very much understand that space. So our right to win in that space is very high. But if we were to start to think, okay, if we found a brilliant niche, let's say in motor fleet or something, it might be the best niche in the world. There might be a real need for it, but are we best placed to deliver it? We'd probably fall flat on our backside if we tried. We could buy the skills in maybe or learn, but it'd just be quite a big stretch, and there's probably people much better placed to fill that need than us. So there's a bit of self-reflection there as well, and being realistic about where can you point yourself where your right to win is high, and maybe not going for those ones where actually it's a real stretch and you don't have the credibility. So I think there's something around that. I suppose it's execution as well, isn't it? I mean, I think it's finding the niche and identifying it and having the product, which is great. And then there's that follow-up bit is the nuts and bolts, the boring bit, which you can easily forget. The actual day-to-day execution of meeting the client's needs, servicing at the volume. How do you handle it if more comes in than you expect? Do you have those processes in place to deal with it, to handle the MTAs, handle the queries, all of that sort of stuff, which that bit can be overlooked because it's not the bit when you put your scheme tinted spectacles on, you can't see that bit often. So yeah, I think those are
very
the
true
things.
And let's say you've picked an area, you can see it's got critical mass, not just from a scheme perspective, but also from an insurer perspective. And obviously we'll come on to Andrew, who's going to talk about data in about 5-10 minutes. But how do you then think that we need to engage and communicate with those customers, not just from the ones that you've already won, but potential customers as well? What does good look like when you're trying to engage them?
Yeah, good. I mean, good question, and that varies, doesn't it? I think it's almost like good communication with customers is sort of communicating via the way that they want to be communicated in a manner which resonates with them with a frequency that they're comfortable with, and that's quite hard to get right, actually. So again, some examples of that is, we had a scheme with estate agents where we emailed communication with them, and we just weren't getting any response. I don't think they're even reading it. And then when we started calling them, they were all on for it. They like talking. They do business. They're used to doing business on the phone, and that's how they receive information and like to get things done. Whereas with IT firms, for example, they less so. They prefer not to talk so much on the phone. So it's getting the medium right, and that depends on the kind of segment that you're dealing with, and then the content. I mean, that's the other thing, is that bizarrely, obviously, if you're communicating with a potential customer, the idea is that you want to eventually turn them into a actual customer. But some groupings, when they sense that you're trying to sell to them, they almost instantly turn off. Whereas others, again, using estate agents as an example, they're really comfortable being sold with, and they've got quite thick skin to that and respond pretty well, actually, because that's what they're doing, every single minute of the day. But we've had some examples where people quite touchy about where that line is obviously differs with each grouping. But generally, if you can share information that's useful to them and demonstrates that you really understand their niche and their problems, you generally get a pretty good hearing back. Great,
thank you, sir. I think that's some really good, clear points on that. And just to put a little bit of an insurer lens on customers, obviously Gary talked about being there to deliver from the claims side of things and delivering on our collective promise. How do you think the insurer, or capacity, given we're on an MGAA forum, how do you think the view on customers and expectations on scheme holders has kind of changed in the last few years in the insurer requirements of the scheme?
Yeah, be careful how I answer that with the biggest insurer in the world in the or virtually.
We're all friends.
Yeah. No, I mean, I think the first thing is that, obviously Gary mentioned it. I mean, there has to be a level of profitability, otherwise the thing is not of interest. So that's got to be there as a hygiene. But I think, I suppose it almost condenses to two broad headings, really, and it maybe just is as simple as that. And when I think about when I was on the other side of the fence, it's you just look at a potential scheme proposition and you think, okay, what's the opportunity for us versus what's the risk? And so, how big is this thing? How big could it be? What does good look like? Against, okay, what's the risk? Are they, how competent are they? Do they know? Do they have data? Can we trust them? Do they have a track record? What happens if it goes wrong? So it's almost looking at just those two things, really. And if the opportunity it considerably outstrips the risk, and then it's going to have wings. So I think it's really that. And I think insurers obviously now expect a certain level of data every month, and and rightly so. And they're not they're increasingly less, probably this is something Andrew will cover, but less tolerant of scrappy bits and pieces of information every month, or massive great holes in information. There is a basic level, and that does, that's pretty much a given now, I think. So data relates become more important. But I think, as Gary says, it's really comes down to those key things. How big's the opportunity? How well do they know it? What's their chances of delivering it? And what is the risk to the carrier if this thing goes wrong? And what is the risk of it going wrong? So I suppose those are. You can mark that. I'll check later on, Gary, if you like. But
and Gary's going to bring you in. I've seen you've put your hand up.
Yeah, I just love Zahid's concept of schemes tinted specs, right? I think that's genius. So well done. I think we should be wearing them at the MGA conference, Joel, definitely. So let's make a little note of that.
We will.
I'll give you a pair if you like.
A marketing stash.
Exactly. But it focuses for me the importance of being really pragmatic and realistic and, you know, scientific really in terms of your marketing plan. So if you have a group of customers where you think you've got that special sauce and you've got, you know, as Zahid said, that that relationship and that conversation that you speak their language, it's then being pragmatic and realistic about what hit rates you might get, you know, in response to marketing initiatives. And then even from a response, how many of those you think you can convert. And we spend a lot of time with our DA partners trying to help them in their marketing efforts by doing exactly that, you know, being pragmatic on PPP search terms, you know, click for leads and so on. That can be a very expensive, you know, part-time ambition if you're not careful and you've not got the expertise to do it well. So yeah, I think being pragmatic and sensible about those marketing plans, as Zahid said, rose tinted specs is brilliant.
Yeah, and I think it's a fair reflection on both, because you sometimes, you know, AXA is lucky enough we've been in the schemes industry for 30 years and will hopefully and will be here for the next 30. You see lots of wonderful scheme ideas come through, but actually they haven't got that discipline underneath them to be able to go to market, or actually go to market in a way that they're going to actually get enough customers through to create critical mass. So no, both very useful sides of things. And Andrew, we've kind of slipped at times, quite rightly, because it's all interlinked into data. But I think if I try to bring you into the conversation now around data, obviously in your role talking to insurers, data is important, right? But and if we have customers, we have our own data. I mean, what do you see in the market as to how people are using their data, and what kind of tips, or what does good look like?
Yeah, thanks, Joel. I think there's I see two kind of key challenges here. I think the first is around capturing the data, and the second is using that data effectively to drive the insights of whatever kind of sector or scheme that you're looking for. And I think the first point, the capture of data, does tend to trip people up. From what I can see, most MGAs, most schemes do actually have the data. It's just not collated in that structured format and sat in a central repository or a data warehouse that allows the easy interrogation and analysis of that data. I guess there's many factors and reasons for that. You know, claims TPA might change. You may have many producing brokers that are generating business into your scheme, and they all tend to fill that bordereau in. Even though it's in a set format, they will all have their little nuances about how they provide data to the central kind of system. And that just makes the analysis of data really, really impossible. Now, you can use, there's external firms and organizations out there that do help with that, because it is a kind of common challenge that quite often we hear that back from multiple insurers that just say, we just can't get the data. If we only had the data, we could analyze it. So I think, first of all, it's capturing that data and having it in that kind of structured format. The second element is the kind of analysis behind that data. What we find is it's useful to kind of break that down into key decision-making units or minimum decision-making units. That could be trade, it could be scheme, it could be size, whatever it is that you want to analyze. And this now comes down to kind of just good portfolio management. So whether you're looking to drive good profit out of particular segments, or looking to see where you may be leaving money on the table, which segments are you writing well, but you just can't see that because you're not analyzing the data well enough. That allows that kind of expansion into maybe other kind of profiles, or to continue and put more effort into driving that kind of profile that you're missing. And it is quite a complex thing to do. I mean, throughout the course of a 12-month period, as an MGA, as an underwriter, you will be making multiple underwriting changes, whether it's rate, whether it's commission, mix changes. Lots of things will be taking place within your scheme. And the key is not to wait 24 months until that business is earned through to see whether you were right, wrong, or somewhere in between in respect of the assumptions that you made behind that. Now, most organisations, well, they'll have a view that I'm going to write this segment today and it's going to run to, I don't know, 50% loss ratio. But they don't track and monitor that as that comes through. Yes, they will look at the accident month results as they emerge through, but it's taking that underwriting view, that expected view of performance, and converting that into an accident month kind of basis. Now that's where it is difficult, because you need to, there'll be another 11 months of business that you've written on different terms that feature into that. So it's about date stamping, it's version controlling, understanding exactly when you made changes, what your expected impact is, and seeing how that will then translate into your emerging results. And things will derail that from time to time. We've just gone through unprecedented levels of market inflation. That probably wasn't in anybody's mindset, going back 12, 18 months before inflation kicked in, certainly not at the levels that we've seen. There's competitor activity. That will derail some of your assumptions from time to time. People may exit the market, people might come in and be more competitive, and all these things have an impact. And when we look at portfolio management, we see it as it's a process. It's not an event. It isn't a once and done approach. You have to constantly go back and refine and look, analyze that data. Where are you leaving money on the table? Where can you make further improvements? So the more granular, I guess, the better. Probably worth saying that you can go too far. So you need enough data in there to be statistically viable. For the purpose of analysis, you may want to group certain trades together. So if you've got a few cafes, restaurants, food outlets, food retailers, just for the purposes of analysis, you can group things together if they're not kind of statistically of certain size that let you analyze them effectively. But I think it's that capturing, it's the analysis, and then it's acting. It's constantly looking at where do you need to make, where can you adjust, where can you agitate the portfolio, where can you put additional rate, where can you loosen rate, just looking at all those actions and constantly analysing, inputting those actions, and then monitoring the effect of those. And it is that kind of continuous loop.
I think as an insurer and capacity provider to the schemes market, all of that is music to Gary in my ears, right? That's this is a little bit of a loaded question, and it's not about AXA. It's more around your views on, let's just say what you've articulated is 100 out of 100, right? That's the dream, and I'm sure there's more. How do you find that conversations with insurers to start new schemes or to roll over facilities are easier and quicker the more data or the more detailed data you have, and are there any correlations between the company and Lloyd's market in terms of the hunger of capacity for data at the moment?
Yeah, I agree with that sentiment completely, Joel. I think MGAs and delegated schemes, as far as insurance is concerned, they do allow insurers to access parts of the market that they normally can't reach, whether it's through expertise or whatever the reason. So there's a huge appeal in MGA schemes. In the same breath, I think it is important that you must have that kind of real good insight and data, because the first question the insurer is going to ask is, why can you do this better than ourselves? Why can you do this better than the market? And particularly if you're an MGA in a space where you've got fellow competitive MGAs, you do really need to be able to demonstrate that effectively. And then it comes back to that monitoring as well. If you've got that data and you can prove that you are not going to get 12 months down the line and go, yeah, we got this wrong, we had our assumptions wrong. It's that constant sharing and working collaboratively with your capacity, I think does pay dividends. But yeah, I think data is just, it's the first, last, and kind of in between. It's everything we hear when we speak to insurers at the moment.
And I think, I'll try and join a couple of bits together if I could. If you think about what Gary talks about at the beginning about why bother and having some secret sauce, and he'll talk about that more in a second when we have a bit of an underwriting lens. If you can then get your data to articulate the secret sauce and the benefits that it delivers, not just for customers but also for insurers, it's that eureka moment that you've got a scheme that can really stand up on its own 2 feet. You're involved in placement, and that, without trying to get you to repeat some of the things that you said and maybe try and take a different lens on it, are there are there any, one or two top tips or things that you see people doing really well at the moment, or staying ahead of the curve, that people should be considering if they're going to, go to market, broker book, or launch into a new scheme space, that could help people just think, oh, actually, I need to think about that?
Yeah, I won't go back over the kind of the profit angle, but I think essentially just having a very clear view and understanding of why your scheme's performing the way it is, and being able to demonstrate those kind of rating or profit portfolio shaping activities. I think what we're also seeing is that there is an element of data enrichment out there, and schemes that are MGAs that are using external data to supplement their own kind of view, just to get ahead of the game a little bit. I think maybe some of the kind of caveats around that are, if you're going to use external data, it's really important that you've got the ability to take that data in and use it effectively. What I've seen before, people have bought in lots of data, but they just can't integrate it effectively enough or properly enough. So they're only getting half the kind of value from that data, or actually maybe sometimes even drawing the wrong kind of conclusions from that.
Yep.
But it's important you've got to be able, you can actually integrate that data with your own and use it, and be clear on the purpose, what you want to use that data for. I think the validity of the quality of that data and the recency are also kind of key important parts. If that data is 2 or 3 years old that you're building in, it could very well be out of date. And as the old saying going, junk in, junk out. You've got to be really careful that you are using that data properly. Just giving an example, a recent example that I've come across in the motor space. We've seen a motor MGA that's very much in the telematics area. So they're using the typical kind of telematics driver behavior data that you would expect. But they've enhanced that further with external data. So they're actually quite unique MGA in that they underwrite policies on a monthly basis. So the more data that they can bring in, that they're able to analyze effectively, the better it is for that MGA. So they're looking at kind of road morphology, weather data. So does that customer, if they typically drive from A to B 2 or 3 times a week, what does that road look like? How does that road look like from accident black spots perspective? What's typical weather? Is that load rival to freezing? What's the kind of the sharpness of the bends that sit along that journey? So they're using all of that external data. They're bringing it in and using it really effectively. And what that's allowed them to do is to kind of target or be selective in how they look at a certain niche customer profile within their market, where they can, I guess, effectively cherry pick. So they're extracting customers that a lot of insurers or MGAs typically wouldn't want, but they're able to write them profitably because they have that extra level of understanding, and so can kind of de-risk their book to a certain extent.
I think it's a really it's like we planned this. It's nice. It's a nice tangent actually about how do you build up your customer base? How do you then turn that into data? And I'll get Gareth to stick his chief underwriting hat on for a second. Gareth, if we start thinking about how we bring that together and some of the things that Andrew has just talked about, how important then is it to make sure that within a scheme you don't lose sight of, or you keep focus on, let's be more positive, you keep focus on that underwriting discipline for your carrier?
Yeah, I think for me, Joel, that is crucial, right? That's the bloodline of a good insurance business and of a good delegated authority or MGA. I think to Andrew's point, if put yourself in our shoes to an extent. If a partner comes to us and says, I want to start something and I'm going to write it profitably, the obvious question is how do you know it's going to be profitable? And the more data and the more history you've got to prove that particular niche and your particular approach, it allows you to differentiate from the broader experience that we've had over many, many, many years, and many hundreds of thousands, if not millions, of customer years across the broader AXA group. We've been doing all of the lines of business we write for hundreds of years, and we've got a lot of knowledge and information about how they'll run. So if you found a special source and you found a way of doing it which bucks that trend, it's just essential that you've got the proof almost to be able to tell that story. And I think Andrew said it very nicely, right? If you're going to change strategy and you're going to do something where you you take out a certain trade segment that is performing poorly, right? At that point in time, you need to date stamp that change in your underwriting strategy, and you need to demonstrate through the ongoing data that that worked. It may or may not work. So I think data is essential and becoming increasingly important. There are a number of insurtech businesses out there that have what look like incredible systems and capabilities to be able to potentially assess risk. ... But they've also got to price it in a way that is attractive in the marketplace, and without proof of that capability and proof of that underwriting solidity, it is increasingly difficult, I think, to persuade carriers that they want to back that greenfield opportunity. So I think the more data you've got and the better your underwriting story hangs together, I think the better chance you've got of getting that support. I think on a more philosophical note, Joel, what I would say from my perspective is, underwriting is 50% science and 50% luck. We can argue the percentages, but that's my experience. I'll give you one example. So in Storm, it wasn't actually Storm Arwen, it was the floods that happened in July of 21. We had quite a considerable loss in one particular street in southwest London. Absolute torrential deluge over a course of about 4 hours. I think it was between 5 and 6 months of rain fell in 4 to 5 hours, and caused all sorts of flood damage, surface water runoff, so it wasn't fluvial. So really, really interesting that happened, but we did some analysis with the scientists and others, and if that cloud would have been just 1 mile to the west, we'd have had very limited losses in that same event. So you'll never get it perfect, right? The models are recalibrated after every loss. They give you a good sense as to what your catastrophe losses might look like, but they're never going to be perfect. So I think having that gut feel and having that understanding of the areas you're operating in, Zahi mentioned it earlier, right? Not getting too clever outside your areas of expertise, and being able to tell that story about how your book has been profitable over time and support that with data, I think is becoming, for me, it's becoming increasingly important.
Thank you, Garen. I think we've touched on it a couple of times, and just to build out on that point of sticking to your knitting, I suppose, as another AXA phrase. How do we turn that into, to Zahid's point earlier about giving the customer a product they want? There's this mythical discussion, isn't there, in the insurance industry called cross-sell, and it's not something that I think anyone in the industry thinks that we've nailed. How do you see schemes delivering on that and actually giving customers what they need, to your point right at the beginning, and then delivering on the promise when they need it?
I'll perhaps give you a view and then see Zai's thoughts. But I think that DAs are ideally placed to deliver on this. Number one, they're closer to the customers, so they know what they want and need, and they can talk to them about it, consistently. And I think number two, they are more nimble, more capable, more able to, react quickly and respond quickly to those market demands. And at the end of the day, that's what we as insurers are trying to deliver, right? Deliver on those customer needs and make sure the claims are handled well at the hour of need. So I do think cross-sell is the way forward. I think, businesses have enough to worry about without having to have 16 different policies. A cyber policy, a PI policy, an office policy, a critical health policy, group life policy, all the rest of it. Now, will we bridge the gap across health and commercial insurance as an example. We certainly have the capability at AXA to do that, and that's something we should look at further down the line. But we definitely have the capability in that commercial space to combine a number of fairly standard products. So a property and casualty package, or a commercial combined policy, if you want to call it that, with perhaps some of the more sophisticated products like professional indemnity, cyber liability, management liability. And one thing we have done with our management liability capability is to lead on that with services for the client. So that's not just about risk transfer, if you will. It's not just about taking the financial downside of a loss. It starts with, how do you have better risk management for your management liability exposures? So we have a supporting framework and a supporting website which business customers can go onto. Actually, 68% of our customers log into that service and register their details so that they're connected into that service. And it gives them advice on health and safety matters, legal matters, commercial matters, and indeed employment matters. So if they need some guidance, they need some assistance, they've got a bit of a tricky issue on, they know exactly where to go, one, to get some advice and some comfort, and two, frankly, to manage their risk better so that the ultimate payment is hopefully reduced. So I think that, that front end service led capability is what customers love and what customers, respond well to. And wherever we can, we should be delivering that as part of a all-inclusive package, one-stop shop, where they only have to pay, one premium, and they only have to have one conversation a year. That's my experience of what customers want. And, we took, you'll know, Joel, but we took over 300,000 calls into that service centre last year from customers looking for, advice. And that's less stress, it's less indemnity at the end of the day, and it's good for the customers. So I think cross-sell is the way forward.
Yeah, and Zahid, obviously cross-sell links directly into kind of what you talked about customers. Anything you want to
absolutely agree. I think there is a trend, isn't it? No one wants to be touching their insurance multiple times at different times of the year with different people, do they? It's people are going to want to do that less and less. And I think certainly schemes MGAs are well positioned to do the cross-sell. I think it comes down to that understanding your capabilities as well, thinking, okay, we can do these lines, we might need a bit of help with these lines, and not being afraid to admit that and get that help and get that support or get that extra expertise in. But absolutely that has to be the way it goes. And I think
I can't miss the opportunity, Zahid, to say it, and that's why picking a great insurer like AXA would be great, because then we can partner up with you and do it. Just going to resist. I can't be in sales and marketing without making it.
Absolutely.
Andrew, obviously that plays quite nicely into data, doesn't it, in terms of how you then talk to your insurer if you are looking at different products. How do you fund them? How do you put enough aside into each area to make sure it's going to be profitable? Do you see people doing that well?
To be fair, I've not had a huge amount of experience of that, where people are diversifying or bringing additional kind of products and scopes, I guess, outside of their traditional heartland. But that diversification, that with any scheme, you are going to probably at some point reach a natural plateau, or struggling to drive volume at the right kind of margins that you're aiming for. So this does come back into testing and learning. It's back into the data element again. If you are going to go into a new segment, what's the reason to believe that you could be successful here? Just because it's a logical step on doesn't always mean it's the right thing to do. So you do need to have that kind of data and insight and analysis to form good, solid underwriting judgments. And this is where working with your capacity provider can often help. They will probably have reams and reams of data in certain areas that you may want to work with them to complement your own data. But I think certainly testing, learning, and do it in a measured approach. So if things are going a little bit off plan, you can rein that back in quickly and effectively and make those adjustments. It isn't just about, right, we're going to write product B tomorrow, let's go gung ho and go straight, and then find out, say 6 months later, it's not where you want it to be.
No, and that's quite it's quite a nice link actually into just kind of, it'd be remiss of us to not talk about the conduct regime, that not just schemes and MJs, but the insurance landscape at the moment in time. And I think that what you just said feeds through quite nicely, actually, just making sure that you know the product, the data around your earnings, are easily demonstrating what value you bring. And I think that's critically important. I was just going to mention two things on the conduct side, because I think if you are looking at a new scheme, that there are many areas to look at, but two just to focus in on for now. Gary did mention it earlier, but I think if I was to talk about product for a second, we do have a saying in AXA. It's not all we do. We don't just have sayings, but we do have this saying, which is actually, and Gary said it earlier, the customer should be at the heart of everything we do, but actually the product, the wording that they are buying, the product that they are buying needs to deliver those expected outcomes for the long term for customers. And so when you are putting together your scheme and the covers that it offers, it's making sure that actually it's not just fit for now, it's going to be fit for the future, and it will deliver on that promise that we are making to the customers. And there's actually a lot more on that that AXA can help with if you want any further insight around it. And the last thing I'd point to, and I think it's quite easy at times to look at brokers have done schemes or MGAs are set up, and there's a higher earnings model. Actually, the lens of the regulator, insurers who are asked to regulate, and brokers themselves, the visibility now on earnings is bigger than it's ever been. And I do think it's quite an important consideration when you're setting up a scheme. To Zahid's point and Gary's point, right, when you're buying in, it all costs, right? You have a cost of acquisition. And the regulator's comfortable with people making appropriate profits, suitable profits, I think is the phraseology. So now it's about taking time to be really clear on what is it that you're being paid to do by an insurer if they are delegated to you, and how can you substantiate that, the value that the customer is deriving when they pay that premium. And it's not just now about if you're the underwriter of a scheme, it's have you got any third parties involved in that chain before the customer is touching that piece of paper or virtual email these days. How can we be really clear and transparent on that? And if you are starting afresh, making sure you don't overlook that, because there's going to be a lot of questions from your insurers and your capacity providers to make sure that you have that visibility. And for those of you in the property space, the leaseholder reforms recently are a very clear demonstration of how the regulator is now starting to look more deeply than it ever has done before, which I think plays really nicely into all of the sections that we've talked about. Actually, when you're looking at value, how much do you need to buy the customer in and give them the service that they want? How much do you need in the data to articulate to somebody how you're giving the customer service, and to your underwriter? And then the underwriting side of things, how are we delivering on it? Not to be overlooked, but also it's going to be iterative and it's going to change. And I think, your rose-tinted lenses, Zahid, which you need to trademark, is another one around value. Just making sure that you don't just think you're offering value, but you just take stock of going, actually, if we're taking a commission and fees and APR income and then we're paying some away, is that fair and appropriate? Also, it will get in the way of the competitivity of the scheme as well. Let's be clear, but really making sure you know that from a customer perspective. I don't know, anybody want to add anything from a conduct perspective? I've tried to zone in on two areas because we could be here for a long time, but anything from Zahid, Andrew or Gary you wanted to add before we move on?
I mean, I'll chuck in, Joel. I think, it's not easy, right, to demonstrate value. So, it's important, I think, that we all as an industry embrace that and ensure that we break down, as you said, the cost model to say, right, this is what pays for that, this is what pays for that, this is what pays for that. And at the end of it, there's a small amount of profit left for, each professional party in the chain.
Brilliant. Thank you. So we've tried to cover off, if we take a step back, we've tried to cover off, if you're going to do a scheme, why bother, and how to make yourself a bit more unique around special source. We've also talked about customers and how to engage with them and how to keep them and how to communicate with them. And then when you've got wonderful customers, how do you turn that into useful data, which then influences obviously all of your underwriting. So they're kind of the main areas that we wanted to cover today, but we're also, all four of us, very keen to make sure that you had our contact details if you wanted to ask questions now, or you wanted to follow up after the event. I believe to those of you within the paywall, you'll be able to get the slides and everything as well. So, and there'll be an email following up, and Tim can correct me if I'm wrong in a second. But you'll have all of our contact details there, and please don't hesitate. All of us would love to talk to you if you have any questions. And if there's anyone who does want to ask anything now, then the floor is yours. Although, Tim, I can't see the chat to see if we have any questions because I'm sharing my screen, so someone else might have to drive.
None at the moment, Joel, but if anyone does have any questions, please put them through now. And just to confirm, Joel, that yes, a link to the recording will be issued after the event, together with the slides and our feedback survey. So there's that to look forward to. But yeah, if anyone does have any questions, put them through on the chat, or indeed come off mute.
Hi, it's Rebecca McDucker, iPrism here. Thank you all for your time today. My question was regarding Joel's last point on value to a package. I'm finding it the other way, that the market's flooded with packages which are put together, and cyber and trustees, PIs all thrown in while keeping minimum premiums low. How do you manage to compete in that space while matching the covers that's offered in the market?
Great question, Rebecca. And first and foremost, how the devil are you? Great to see you.
Very good, Gary.
It's fantastic to see you. Yeah, we must catch up. It's a great question, right? But I think the future lies in us all accurately pricing those areas and making that very transparent to the customers. They know exactly what they're getting. And as an industry, we're probably not quite there yet. We've probably got some of the package capability, but that visibility and that capability for the customer to see exactly what they're getting and exactly how it breaks down is not always there. It is in certain instances, but it's not always there. So I think it's a case really of working with your insurance partners to do that, to make it as transparent as possible so that customers know exactly what they're buying.
Lovely. Thank you very much.
Thank you, Rebecca.
Any other questions from anybody? Feel free to come off mute. Nothing coming through at the moment, Joel. So I'll wrap up if I may. Don't know if you've got any last thoughts that you'd like to add. Otherwise, I'll wrap up today's session.
Only thing from me is a massive thank you to you all for joining us. I know, Tim, you're going to say the same thing, but a massive thank you from AXA. We're a long-term supporter and sponsor of the MGAA, and will continue to be so. And we really value these sessions and also people getting involved. So, we really, really thank you for joining in. And Zahid and Andrew, again, on behalf of AXA, massive thanks for joining us and getting involved. And the quality was fantastic, guys. So thank you ever so much. Tim, over to you.
Thank you.
Thanks, everyone. Joel, if you wouldn't mind just going one slide back, I think that would be a good idea, just so everyone can see the contact details, just in case they need them once again. Perfect. Thank you. So thanks very much indeed, everyone, for joining us for today's session. So I'd just like to recap on the learning objectives, first of all, which were outline how to create a multi-product scheme built around customers' needs, explain how to create a clear distribution strategy, describe how to work with insurers to create something unique, and describe how to scale up an existing scheme. So yeah, just remains for me to say thank you very much for a fascinating session. You can reach the panel at the email addresses shown, or feel free to contact me at tim.richards@mgaa.co.uk with any questions or for introductions, and I'll be happy to pass these on. Thanks to everyone for joining us. Please don't forget to provide your feedback once you receive the email, and do look out for any forthcoming MGAA events. as always, hope you all have a productive afternoon. Thanks once again to the panel, and see you again soon.
Thanks all. Thank you very much.
Thanks.
Bye.
Good afternoon.
Bye.
Take care.
Bye-bye.